everyone. It's Robert Fischer with the RJF team with Keller Realty. I'm here with Ryan Owens again, and a lot of people are asking, and we get this question every day, like what's going on in the Central Texas real estate market? And so we get to sit down and do this every day, and we love it. And this is what we do. Everybody has different opinions, so no one actually has a crystal ball, but we have a lot of facts about what is going on. We get to show you a lot of the macro data, a lot of the micro data, so we'll walk you through that today. So we'll just kind of talk to each other like we normally do. If you have any other questions that maybe we didn't answer, or thoughts or concerns, or just need us to come out and look at something, let us know. That's what we're here for. So last time that we went through this, it's one of my favorites. You always open up and you tell us about like inventory, number of people moving here, and unemployment, inflation. Like, talk through us on
Sure.
those things.
Yeah, in our last video, we kind of answered the question, what's the market like right now, by, like you said, answering that question. What's going on with unemployment? What's going on with interest rates and inventory?
It's crazy right now. Video done. Sorry, go ahead.
Yep, there you go. That's all you need to know. Okay, so let's dive in from an unemployment standpoint and what we're seeing. And let's start by talking about the number of people we're seeing move here. They just released this number a couple weeks ago. We're seeing they call it a net new number, which takes the number of people moving here minus the number of people moving out, number of people born here minus the number of people that have passed away. So a net new number to the greater Austin area on a daily basis is 184 people per day in this area.
Per day.
So that's 67,000, somewhere around there, people per year, which might not seem like a crazy amount of number, but consider it this way. Like if you take the population of Hutto, of Taylor, and Manor, and you add all of those together, you get about 67,000 people. So that's what we added this last year, and what we're likely to see continue into this next year. We're adding minor cities, several of them every year in the greater Austin area. So from an employment standpoint, for people moving here, there has to be jobs, and that's what's bringing a lot of people to this area, is the fact that there are jobs. We have a lot of employers moving to this area. I think they said last year during our pandemic, we had 154 employers commit to relocating here or expanding their operations here in Austin. And so that's what's bringing this mass amount of people to the area. As such, we've seen our unemployment numbers continue to fall from where we were in the pandemic. We're below the Texas national average. I think Austin's at 5.3, Williamson County's around 4.9% unemployment. And so those numbers are significantly better than where we were sitting here at this table a year ago, talking about unemployment as it had spiked.
Remind me, what was it? So Central Texas area, what was it right before the pandemic? Were we at historic?
Well, before the pandemic, we were at historic lows, I think 3.6%, somewhere in that range in the greater Austin area.
And then we got as high as what during the pandemic?
12%.
12%,
Yeah.
and then now it's down to between
Austin
4 and 5.
Yeah, Austin's been the second fastest recovering job market in the entire U.S. And again, a lot of that is due to number of companies that are moving here, creating job opportunities, which I think we'll see continue. I mean, I think we're at the beginning stages of employment opportunities, as a lot of these employers have just announced that they're coming, but haven't started their operations here yet. And so I think we're going to continue to see a large number of people moving here to fill these jobs.
Well, that's one thing I was going to say too. We heard one local economist say that, hey, everyone's moving in. This is what this looks like. We're seeing all this growth, but a lot of these people relocating won't even be here till 2023.
Agreed.
And so that's his own take, but there's some pretty good data on that.
Yeah.
So
yeah, just look at the major employers: Apple, Tesla, Oracle. They might have hired a few people to be in the area, but for the most part, they've still got all their hiring to do to fill those positions. So I agree 100% that we're at the beginning stages of seeing a lot of those companies hire.
Now, and one thing that's a little bit of a trend that we're not used to in our area, though, too, so this might play into some of those people moving in 2023. We have more people buying here now before they're moving than we've seen before. I can't tell you how many that are actually showing up on at a listing and they're doing a video walkthrough and they're an investor and they're buying now as an investment because they're watching the crazy numbers, which
Yeah.
we'll go through. Um, but some people are buying now and just, they're going to lease it for a year or two until they move here because
Yeah.
they want to catch the prices.
Agreed. I think we are seeing a lot of investors from around the country recognize what's going on in Austin and they're trying to be on the front end of buying properties here. And so that is a lot of what we're seeing, a lot of out-of-state investors buying properties, whether they're going to live here or not. But I still think we're going to have another wave of buyers coming in the next couple of years that are here to work and live in these homes. And so I think this is the front end of investors trying to be on the front end of it. So let's talk about interest rates, the second piece of this puzzle in our real estate economy. Interest rates in January, I think we did this in February, we're coming off of all-time lows. I think we were down at 2.65 at the beginning part of January of this year, which was a all-time historic low for a 30-year fixed mortgage rate. So we saw that kind of spike up after the video we did several months ago. In April, it got as high as 3.2%, and it's come back down to national average being 2.96% on a 30-year fixed mortgage. And I think your 15-year notes are still down in the 2.3 range. I mean, so rates from an interest rate standpoint, historically good prices on interest rates. And what we would call, if we look back over the last 20 years, one of the best times in history to jump into a 30-year note, right?
Yeah, my dad would always tell me about when it was 15% to go buy a house and what that looked like and what that did for the economy. And so yeah, that's amazing.
Yeah. So in the midst of this market, which can be tough for the buyers, we at least have a low interest rate environment. And I think we're going to see that low interest rate environment continue for a while. We pay close attention to what happens with interest rates because it obviously has a big impact on the real estate economy for this area, and not just this area, but nationally, honestly. And a lot of that's dictated by the Federal Reserve and their interest rate policy in general. Mortgage rates tend to kind of go lock and step with what the Federal Reserve does with their interest rate policy. And they've commented multiple times this year that they plan on leaving rates alone and not raising them this year. Inflation numbers came out last month higher than expected, which would lead people to think that they might have to raise interest rates sooner than expected. But we'll see. And they're going to meet again in June, and we'll be paying close attention to their comments there. But I really don't think they're going to be increasing interest rates. I think they were actually encouraged by the inflation numbers because it's a sign that their low interest rate policy is working and creating a strong economy. So it's more just validation for their policies over the past couple of years and not a reason to immediately jump away from that policy. So
it would only be if inflation gets out of control, and that's the things I think I was thinking about that we might really have to watch is do we have enough employees, to help do the work? Do we have, what about construction costs and all those, like if those get out of control, now here locally we're seeing a little bit of that getting pushed on, but if we can get that back in control by the fall, that should kind of keep us pretty stable.
Right. I think it would take many consecutive months of seeing inflation numbers coming in higher than expected for the Federal Reserve to make a jump into a higher interest rate policy and increasing rates. But you're absolutely right. I think the other thing that we have to keep in mind is we can't just look at what's happening locally. Like the Federal Reserve is looking at it from a national standpoint. So we're seeing things kind of on a micro scale here in Austin with a shortage of labor and materials, but that we need to see that across the nation for it to be considered a major issue that the Federal Reserve looks at. So Okay, so that's kind of what's going on with interest rates. So again, a plus in our interest rates being low. I think they'll continue to stay low at least through this year, which creates more buying power for buyers and an overall positive interest rate environment for buyers. So the third piece of that puzzle is looking at inventory. And real quick, just to define inventory again, if we were to take the number of active homes that are for sale and compare it to the number of active buyers that we have in the market, how long would it take the inventory that we have for sale to be consumed by the demand? In a healthy real estate market or a balanced real estate market, that number has historically been between 4 to 5 months. Is that right?
Mm-hmm.
Yep. Last year, that number dipped below 2 months into the 1.5 month range. And I think in February of this year, we weren't measuring in months, we were measuring in days. In the greater Austin area, it got as low as, I think, 9 days. Williamson County got as low as 6 days in all of Williamson County. So I think we describe that as an inventory shortage. The good news, if you want to look at it that way, is that it's more than doubled since March, and we're up to about 15 days of inventory in Williamson County in the greater Austin area. But a couple of things with that, and I know you're going to get to speak to that too. So this is a historically low amount of inventory, but there continues to be new inventory coming on the market. It's just that the demand is higher than it's ever been for homes. And so we're not seeing the homes accumulate on the market, creating this surplus of inventory. We still have a lot of homes being sold. They're going a lot faster, and a lot more are being sold, which is keeping the inventory low. Would you agree with that?
Yes, and that's probably a big indicator that people, I think, kind of misquote a little bit. Like, there's just no homes for sale. Well, that's not true. We're actually selling more homes this year than we were last year. They're just selling faster because the demand is higher. And so when you think about it, because we have a lot of people come to us and say, I don't want to get into this crazy market. I can't get a home. There are thousands and thousands and thousands of people getting homes every single day. So just know, like, you can do it. And there are some difficulties, like, and this is, you have to be strategic on how you do it here versus there. But people are buying homes, and we're buying more homes than last year, and so I try to encourage people in the midst of that. Like, if you need to get a home, you got great rates, you're in a great market, like, now's the time to do it. If this is the right season for you, it absolutely makes sense. And if you do the right things, you will get a home.
Yep. I agree 100%. I think that from a health of a real estate economy in our area, low inventory is what's continuing to drive prices higher. And so, that's a question that we get asked a lot. Do we think that this price trend is going to continue? And none of us have a crystal ball, but it's a combination of these things that we look at. What's going on with our employment picture in Austin? What's going on with interest rates? What's going on with the inventory? And you combine all of those together, and they're all three point to a really healthy, really strong real estate economy that's going to continue to advance. If I take those three factors, they point to a stronger real estate economy, not one that's slowing down or even, honestly, even leveling out right now. It's all indicators are still pointing straight up. So we continue to monitor those, and those are the reasons we continue to do these videos on a quarterly basis to update you on what we're seeing. But that's breaking down those three. That's what I'm seeing right now. And so I'll kind of turn it to you, since you work in this business day to day, working with sellers.
Real quick, what about pricing? Like, how has pricing changed?
Well, yeah, good question. So just looking at the numbers, if we look at Williamson County year over year, this time April of last year to April of this year, we saw the median home price increase 43%. Okay, that's
43%.
I don't know that we've ever seen that type of number in this area. That brings the median sales price in Williamson County to $430,000. I feel like 2 years ago that number might have been in the 260 range, 270 range, maybe.
Mm-hmm.
But yeah, year over year up 43.5%. Crazy.
That's absolutely crazy. Yes, that's yeah. And we'll talk more about what that means and what we're seeing with the micro data, but yeah.
And so I did want to, I'm sharing some of these data points that we're seeing from the Central Texas Housing Report. You're working in this business every day. You're talking to sellers every day. Is this consistent with what you're seeing as you're working with sellers?
Absolutely. And before I go into the seller side, we had a client call the other day. They said, "Hey, we're looking for a home for $250,000. We know we have to go a little bit further out. Can we even find anything?" And we kind of pulled some data, and you can. Like it is a lot harder. You do have to go further out from the hub city, and I'll talk about that a little bit more later too. And you're hearing the average price points, which means that does make it harder the closer that you come in. But there are places to buy things that are out there. And a lot of people are coming in and 300, 350 and what that looks like. And then we're seeing more homes when you look at all these different areas kind of sell at these average price points and above, again, that we've ever seen. So the micro data that I feel like the media can't report, which is what we like to see, and because we do a lot of volume, we can see it, and we talk to a lot of agents as well. But if you were to take so let me step back a little bit. October, last October, the market was hot. That 2 month gap from October to December went from hot to on fire. And then from December to March and April, we saw this crazy run up in prices. You could have made a $50,000 difference kind of between those months and not even realize it.
At least.
Yeah, it was, yeah, you're right. Because, percentage wise, it was crazy. Like there was just not enough inventory. 6 days of inventory just made the prices really shoot through the roof. But once in April and then now into May, we're seeing a little bit of a shift. Market's still strong, still a seller's market. But the home in February that would have got 40 offers, went 100 plus K over list price, all that kind of stuff in the suburbs, because this is, there's a big asterisk to this, which I'll talk about. In the suburbs is not getting that same thing now. The prices went like this, and now I feel like they're starting to kind of taper off a little bit, but they're keeping these high prices because of the high demand. So that same home might only get 5 offers, might get 10 offers, depending on where it stands, but it's getting these prices.
And I think if we were to break that down into numbers, like in February, the 6 month comps for that home that you described might have showed 350, and an agent prices it at 380, and they get 40 offers and it goes for 480. And that home is now closed, and that's now a sales comp for any new listings that come on the market. And so instead of pricing it back down at 380 like we would have in February, listing agents are pricing it where they've been selling. That home might be listed at 480 now and is not likely to go 100,000 over per se, but it's priced to match the demand, which we didn't have. We weren't able to match prices to the demand back in February and March because those sales hadn't come through to give us actual comps for what people are willing to pay. And now we have those, and I think that describes what's happening is homes are being listed much closer to the market price, what buyers are willing to pay for it, and that's I think that's what's happening and causing what we'd call leveling off, still as strong as it was in February, just more accurately priced.
Absolutely, yeah, and when we started seeing this in December, because we had their micro data, we could look at it and say, no, we need to start listing higher, and no one was really seeing it. Even I'd go on a listing appointment, and I'd talk to the seller and say, we need to list here, like really trying to push the number. And they're like, Robert, there's no way. There is no way. And like I had one seller, I laughed. They, we were going to list at, they wanted to list at 400. I told them we got to at least go 450, but I want to go higher because this is what this looks like. And they wouldn't let me go any higher. And what do you know? Multiple offers came in. It was going crazy, and we sold in the low 600s. Like it was. And it's no one can ever predict it, but you can see the amount of people that are going in. But now you're right. There is enough data out there because generally what we do is when we run comps, we go 6 months back. And so people were pulling last year's data. Some people are still pulling last year's data on pricing, which isn't good. And I'll talk about the buy side on this too. But when you making sure you're doing this year's pricing, like you'll still get that high dollar amount, which is great. And so it's amazing there. On the buy side, what's scary is some people can't tell whether they have list on yet last year's pricing or this year's pricing. And so having someone to kind of dissect that for
We
you
can.
is very important. Yeah, that's I mean, but seriously, I mean that's
Yeah.
what we do when we look at the stuff of because we have the data now. So prices have caught up, people have seen it, and you're still getting some going over. And the asterisks I mentioned earlier is there are still, of course, some hot areas. Like if you go near the new Apple campus or whatever, things are like you just don't know. There's a bunch of wild cards. Also, I think I mentioned this last time, the product sales. And so if pool homes are going crazy right now, the shiplap homes with the white cabinets and wood floors, and that's really hot right now. The big lots, the back into a green belt or a golf course, a large one story. These products that are very popular. Ooh, great guest living right now. Whether you have a
Yeah.
separate casita or whatever, these are the ones that we can go in and really push the premium, and you still might see things get crazy.
Agreed. Because they're few and far between in this market finding that product. So
Yep, yep.
people are willing to pay a premium.
And the other thing that we had to fight, so we said prices have caught up, and these don't always go hand in hand. Normally prices catch up, appraisals always lag behind because they're trying to do a conservative view on what the appraised value is. And by the way, we see appraisal on one home all over the board. I've seen three different appraisals on one home and between $100,000, and so it's one person's opinion on what the value of that home is. The good news is there's now enough data. Most of the appraisers have caught up on the value.
Yes.
And they're doing their job right. That's how they should do it. But they have enough data points. So that's good for the sellers.
And the buyers.
And the buyers.
Yeah.
Because what we were seeing too is, most buyers having to come in multiple offer situation. Not all of them, but a lot of them are doing appraisal waivers, meaning they're going to cover a difference in an appraisal gap, right? And so, or the right to terminate based on an appraisal. And so now, because that is caught up, buyers are a little bit more confident.
Right. It decreases that risk to the buyer that makes that a part of their offer. Yeah.
Exactly, exactly. So that's that side, more, mainly on the sell side. What do you see on the buy side as a buyer specialist? Like, what are you seeing?
Yeah, I think I really want to reiterate what you said earlier. We are still seeing buyers go under contract on homes every day. It's happening, but it is tougher than it's ever been for a buyer to get under contract. I think that's fair to say, but want to make sure we reiterate the point that it is happening. And a lot of that, we talked about the lack of inventory. We're still selling more homes than this area has ever seen. It's just they're going a lot faster. So buyers have to be a lot more strategic in how we're putting in offers. They have to be a lot more prepared to go through the process. And let me give you an example. So on the buy side, if we're going to go into a multiple offer situation, which I'd say the vast majority of contracts that we're getting under contract have been through multiple offer situations, a seller is going to look at what their risk is with the buyer. What outs or what contingencies does the buyer have that could hurt me as a seller? And so we know they're going to be looking at that. So when I'm preparing buyers, we have to figure out if we're going to be competitive, we have to remove as many contingencies as possible to create this attractive offer to present to the seller.
Depending on the buyer's risk tolerance, of course. But yes, that's
Well,
exactly. Yeah.
sure, yes. And yes, absolutely. But one example, one way we can do that is with a financing contingency. And so what I'm seeing in this market is, majority of people are buying homes with financing. That's very common, happens every day. But there might be more advanced conversations with the lender to get further along in the approval process right now, versus just having a pre-qualification. We're starting to verify income. We're starting to verify assets and employment and get a lot further down the road with the lender before submitting an offer, so that when we submit an offer, we can say, you know what, our offer is not contingent on a financing approval because we've already talked to the lender and we're already approved. And that can make an offer significantly stronger, right? If there's no potential backing out from a buyer standpoint on the basis of not being able to get financing, a seller finds that a lot more attractive, right?
Absolutely. I had a seller, without me even coaching them, chose a little bit lower offer because this one was not contingent on financing.
Yeah.
And we have two ways to do it. We have a lender that can remove your financing contingency, so it's there, but you know that you're going to get your financing. We also have another lender that can help turn our finance buyers into cash buyers. And so whatever the strategy is there, we have options for both of them. So
I think that's the main point I want to make is that there are strategies in this market to, uh, like you said, depending on risk tolerance, to make offers very attractive. And to, if it's what the buyer wants to do, remove as many contingencies as possible. If you need to sell your home first in order to be able to purchase, we've got a program for that. We can connect you with the right people to make that happen. If you want to be fully approved before putting an offer so that we can make it not contingent on financing, we have lenders that are willing to do that and do that front end work for us to make these offers more attractive. The other thing we're seeing is the offer terms matter right now. All right, it's not just price. If you're willing to come in with stronger option money than we've seen in the past, or stronger earnest money, or again, removing these contingencies, it's all kind of a package deal. And I feel like the entire package is being looked at more than it has in the past to really evaluate an offer. And I know our team has done that for a long time, but what I'm seeing on the buy side is that the offer terms matter more than they ever have before.
absolutely. And my favorite story, and I shared this before, but it's worth sharing this again, is we had this one buyer who was not working with our team. He called in and said, I've missed 5 offers. I want to know why, and I'll decide whether I want to work with you or not. And normally we can't find that data because we weren't part of the transaction, but we went out there as a team and we found and looked at all 5 of those offers, and 3 of those 5 offers, he was the highest offer. But they didn't know how to write the contract and the terms were wrong. And so when he looked at it and he looked at everything, he said, well, I would take away financing contingency if I knew that was a big deal. I would do this on option, or I would do this on whatever. We did it. Within a week later, we got him under contract. And so it's imperative that like, do they have relationships with other agents in the area? Do they know how to write an aggressive offer? And sometimes that's not even the highest price. Another example is I had one seller, again, without my coaching, I presented them all the offers and all the terms. So when we do it, we actually, if assuming they're close, we put them in an Excel spreadsheet so they can see everything. They took an offer that was, I don't know, $10,000, $20,000 less than another one, simply because this one either had little or no option period, it had no financing period, they were putting more money down, they had a full appraiser waiver, and they just went through all that stuff, and they looked at it and said, Robert, these guys are serious. We need the highest price, but we also need confidence that this is going to sell. They put that together and they said they wanted this one. I already planted the seed. I was like, I don't think they're going to go with that one, but they sure did. And so the terms matter.
Yep.
So,
and our team is familiar with these terms. We see it every day. We're working in it every day. Our relationship and our back and forth to know what you're seeing on the listing side and from a seller's perspective, what's attractive, has really helped us on the buy side to know how to be aggressive and prepare offers, or at least make recommendations to buyers who will make that decision for what's best for them. But agreed. It's exciting. It's really tough, but it's fun to get to work through this environment.
absolutely.
So real quick, I want to touch on some new construction too, because we get asked that question a lot. What's going on with new construction? A lot of people have been frustrated with their experiences with new construction. And so a couple things. Because of the demand that we've had, new construction used to be that kind of fallback option. Well, like if we can't find a resale that we like, we're going to go get a new construction, and we know it's going to take 6-7 months to build, but that's fine, we'll wait. The frustration has come in the fact that it's not that way anymore in this area, anyways. Real locally, there's other surrounding areas that where we could probably walk in and get under contract on a home, but at least for this area right here, those days are not here right now, where you can walk into a sales office and put a contract on a home that you like. One of two things is happening. You're either put on a wait list for the right to be able to purchase at a home at a given time. And we've seen those wait lists range from 45 days up to 3 years.
Yes.
But the other thing that builders are doing is they're going to a bid process where they're
Not all of them, but
not
a
all
lot
of
of them are.
A lot of them are going to this process, and so I think it's worth just knowing what's going on out there, where they would say, "Here's the home that we have that's going to be available in September. Starting price is X. Submit your best offers to us by this date." That is a really tough process for buyers, and most buyers don't like that. But it's worth noting that that is the process that several builders have gone to recently. Again, it's not that way everywhere, and we can, if that's not the route you want to go, we can help you find areas where that's not the case. But it's usually, like you mentioned earlier, moving a little further out from these suburbs to find newer communities that are maybe 20, 30 miles outside of the city that have a different process right now.
Because they feel like they have maybe more of the control and all that, or just demand and prices are increasing. It's several things too. They're selling less to investors. Many of them are saying no, or just holding a few of their own to kind of get that out there or whatever. And they have more buyers than they do product, so they are limiting the release of it, because what we're seeing in our area, because prices are going up so much for materials, that they don't want to put this future phase under contract now, because if that's going to be built in 1 year, who knows where the prices are going to be. So it's slowing the growth of what it could be.
So as we kind of wrap this up, I want you to kind of touch on questions that you're getting from sellers on a regular basis, day to day. What are people asking you?
So two questions pop up. So the first question that I hear the most, especially from locals, and should I sell now? And you'll get a range of different realtors telling you different things, and I think a lot of them are very definitive, like you should do this or you should do that. And I don't think that's the truth. I think you have to look at the whole situation. I think you have to look at what's your short and long-term goals, because that does matter. Are you buying again? Are you not? Are you going to be, if you are buying again, are you going to be financing and kind of capping in these low interest rates and what that looks like? Are you going to be able to take advantage of the capital tax gain savings on a homestead and what you can do and all that most of the time? And so that there's reasons why you should and why you shouldn't. I would say, and also people's risk tolerance. So when I think of the risk tolerance, I always explain this. I always use it this way. And I would say 70% of my sellers, when I'm talking to them, when they're asking this question, there's normally a reason why they're asking this question. And their risk tolerance is, knowing what I can get today is a lot better than not knowing what I can get tomorrow. Because they're saying, shoot, if I went up 43% and this is what this looks like, if that were to correct because we had another national disaster or something like that would hurt. That $100,000, that $200,000, that would hurt me financially, and I don't want to risk it. And so selling today for that personality type is a great option. Now I would say the other 30% is they're looking at some of the data and they're saying, I think it's still going to go up, and it's not going to affect me as much losing that $100,000 to $200,000, because I can hold short term or long term, whatever that is. I'm kind of willing to roll the dice, and maybe I do hang on to this one. I did have a good friend of mine that they were looking at this. They were very strong in the market, and 2 years ago they were going to sell their home for $300,000. And they looked up and they're like, I don't know, let me hang on, but I'm going to sell it sometime, and that's what they were expecting to get. 2 years later, they were able to get $500,000, and I said, cashing out now makes sense for me because I can do some stuff with this money. This is what this looks like, and I can help set up my financial future later, and that's what they did. And so what I like to do when I go through and I'm sitting kind of face to face with someone, like unbiasedly, like I tell them, like, I don't, whether you buy, whether you sell, whether you buy is completely up to you. Let me just walk through, like, tell me your whys, tell me what you're going to do. I can look and see where they're at in the neighborhood. Are they the most expensive home in the neighborhood? Are they a higher risk property? Are they a lower risk property? Is there something being built over by them and that they can go through? Do they have a risk tolerance of moving to their next dream home but leasing this one out? And how is that going to affect them, and what does that look like? So the second question that people will ask is, how long will the market stay like this? And We always say it like nobody has a crystal ball.
21
Nobody
months.
knows. Yeah, exactly on this date. And I'll tell them, so what I like to do, generally by this time, I've given them enough data. And I'll tell them there are three schools of thought. And, and you'll look at everything. But the one school of thought is, you know, buyer, seller, beware. We've been on a 12-year uptrend, 13-year uptrend, I think now. Um, and normally you go in 7-year cycles, right? And so and we've seen such high inflation. This is the very conservative view, right? So this is option number one. Option number two is, we've had local people say that we think we're only in the seventh inning, so that we got another 2 or 3 innings left, and we might have extra innings. You just don't know with everything going on, and so that means we got a little bit more time. And then you got people like Elon Musk saying things like this is the next 50-year boomtown, and that very well could be the case. And so I try to let people watch everything. I try to say, again, and then the other things you can't plan for, if let's say those top two are right, which a lot of people in our area are leaning towards those top two. We're either in the seventh inning or we're going to be a 50-year boomtown, so things are looking great for a little while. That local economist also said at least until 2023. But what we can't predict is there, a national incident that happens or whatever. And I know you don't plan for that, but you never plan for that. And so that's why you still have to look at where you're at, what you need kind of out of everything.
Yep, agreed.
And then lastly, the things to watch are the things that we always talk about are watch for inflation, watch for unemployment, watch for worker shortages, watch for material shortages, the number of people moving here, the number of companies moving here, where are interest rates at, and then we're also watching inventory. In this kind of market, again, when you're watching inventory, like you're seeing, you and I were talking about one time the number of active homes for sale right now this year is like 75% than when it was
Lower
last year.
than last April.
75% less active listings. But we have more pending listings, right? And so that means we have more people going under contract on homes to buy their future dream home than ever before. Mm-hmm. So I always like to paint the picture of hope because it is out there. People are just hearing like when someone comes in and they're giving advice, and I say this very humbly, but they're not seeing as much, they're not doing as much business or whatever, not seeing what's out there. All they hear is every home is going 150K over list price. There's no way you're going to get it, and every home is cash. In all reality, from the listing side, I would say 95% of the offers I receive, they're financed offers. Now they're waiving that appraisal difference, right? And the buyer is generally going to cover it, but they're financed. It's not a cash buyer that's generally coming in that's getting the property. But we are seeing some of those, and there's ways to kind of make that happen. So all that said, those are the things to watch. The real estate market is changing by the day, and so a lot of times now, when I go on a listing appointment, we might sign a listing and we're going to list a month or two later. We say, here's the general pricing, what it is today, but we're going to look right before we list because it changes that quickly. Yeah. We have the micro data to watch it. Let us know if you have any questions. Again, unbiasedly, we love to go through this. We have these conversations with friends and clients all day long. And we have many of them that hey, we just want to pick your brain. What do you think? And again, we don't have all the answers, but we're in the industry and we do this 70 hours a week. We're going after it. We love our job. We love what we do. And so if you have any questions, let us know, reach out. If we didn't answer something or you want us to answer something in the next video or talk to us in person, we're here to help.